Welcome. Crude at current levels in a bit of a range, feeling very comfortable in this zone. What's it telling us at current levels?
Yeah, good morning, Ben. Great to be here. Thanks for having me on. A combination of the increasing coronavirus reports, rise in the U.S. dollar, Hurricane Ida, production outages in the Gulf of Mexico, all of this is conspiring to help keep oil supported at these prices, just generally speaking. Ben, as you know, our forecast has been for a June or July top of this year, and then a multi-month sideways to lower movement that would take us into November plus or minus a day. Plus or minus a month. So we're planning on seeing November being a bottom in crude oil. It could come as early as October. And in that time frame, we think the market would be testing the $65 level again. So roughly speaking, we think the correction continues into November. We will probably be testing $65 or so in November, plus or minus a month. And if they firm up and close the month of October or November above the $65 level, we think that starts a healthy advance.
David, you were spot on in terms of the rally, in terms of the move up to the 77 high. And off that level, again, we've been watching some weakness, as you did comment or expected to see, as we've been unable to kind of continue in terms of that momentum to the upside. One of the things you watch for, hurdles that need to be crossed in order to continue that bullish sentiment. And we lost some of that as we topped out around 77 beginning of July. And as mentioned, we've gone sideways. It sounds like you think there could be some further decay into this fall, which would feed right into what I was mentioning at the top of the show in terms of Goldman recently, Morgan Stanley, Citi, all kind of pulling back in terms of some of their expectations for growth. We saw that Friday in terms of the jobs report. I mean, it all sort of feeds into this discussion that, yes, things could be worse. Investors managed to shrug off some of the concerns, as you pointed to, the COVID Delta variant, obviously a focal point, and some of the other fundamentals at play. But for the most part, I mean, again, the markets here are just in this holding pattern, sort of waiting right now for that next kind of catalyst one way or the other.
Yeah, Ben, we certainly had a hell of an advance, right, over the last year.
Yeah, big time.
The market has really earned a pause here. There's really nothing unusual or nothing peculiar that we're seeing in this. I would say that a peculiarly strong crude oil market would take out the 77 high. We're not forecasting this, but if they were really, really strong, if some other world event or something came up, and we took out the highs of $77 prior to October or in early October, that would be probably the strongest position crude could get into. But the more normal expectation is what we're going with, again, which is that in November, plus or minus a month, we'll be bottoming at $65 or lower. It would be nice that if in that time frame we were closing monthly or even weekly above $65, that would firm the market up nicely. And then I think you see a continued advance in crude oil. We haven't worked out where they'll go from there, but I think the November bottom, plus or minus a month, will make a big statement to us that the market is in a healthy position.